Hello everyone. Today we will be concluding two topics, or you can say two subsidiary book, that is purchase return book and sales return book. Now both of them, they are same, but there is a little bit difference. Okay, now let us see first what is purchase return book. Now purchase return book is also known as purchase return journal. This book is used to record the return of such goods as were purchased on credit basis. Means if you have purchased any goods on credit and when you return some of the goods, then it will be recorded in purchase return book. But if you have purchased any good on cash and if you return some of the good back, then you cannot record it in purchase return book. So as from the meaning, it is very clear that only when the goods which are purchased on credits were returned, at that time we will record it in purchase return book. Now this book is also written as return outward book. There may be various reasons for returning goods. Now let us see what are those. Now when the goods that we received is not according to the sample that were shown before, so at that time we can return some of the goods that we have purchased. Then when the goods are not according to the order or the quality of the goods supplied is inferior, means when we received the actual good, when the quality of that good is lower than the quality that we have already seen. Okay, when the goods are defective or they have been damaged in the transit, means while transportation, if the goods get defective or if it gets damaged, then at that time also we can return some of the goods. Then when the price charged in the invoice is in excess of the agreed price, sometimes our supplier, what they do is that they will agree upon some price and they will charge more at a later stage. In that case also we can return goods. When the goods have not been delivered in time, if we have particularly mentioned that we want to receive our goods on a particular date and time, then if the delivery is late, at that time also we can return the goods. Now when the goods are returned, a debit note is prepared and is sent to the supplier. Now suppose, let's say example, that you have purchased a good and you want to return some of the goods, then at that time what you will do is that you will prepare a debit note and you will send it to your supplier along with the goods that you are planning to return. Now that debit note contains the name of the party, means the name of your supplier, then details of the goods returned, means how many goods or how much goods that you have returned, and reason also for returning the goods. Each debit note is serially numbered, means you will put serial number on your debit note. Dated, means there will be proper date, and is prepared in duplicate, means you don't prepare only one single copy, you will prepare duplicate copy as well. Now original copy is sent to the supplier. Now original copy that you have prepared will be sent to the supplier. Now in that, through that you can inform about the amount for which his account has been debited. Now when we return goods to the supplier, his account gets debited in our book. Okay, in our book of accounts. So when we give debit note to the supplier, it is kind of intimation that your account has been debited in our book, and the reason for that is that we are returning goods. Okay, now it is called a debit note because the party's account is debited with the amount written in this note. Since we are going to debit his account in our book, that is why that note is known as debit note. The party to whom the goods have been returned also prepares and sends a note which is called the credit note. Now when we give debit note to our supplier, at that time our supplier also prepare one note, and in that note will be given to us, and that note is known as credit note. Duplicate copy of the debit note becomes a source document, since we have the duplicate copy, and based on that duplicate copy, or you can say a source document, we make entry in our purchase return book. Because for every transaction, for every entry that we do in our book, we need a source document, and in that case duplicate copy of the debit note acts as a source document. A debit note is also sent when a sales invoice is undercharged by mistake, or a sales invoice is undercast, or some particular goods are omitted to be recorded in the sales invoice. Now while purchasing good, if the sale invoice given to us by the supplier misses something, means if there is mistake in writing down the amount or any other particular information, at that time also debit note is given to the supplier. Now let us see the format of purchase return book. Now in first column we will have date. Then particulars, we will write name of our supplier whose account are that we are going to debit. Then debit note number, we discussed that each debit note is serially numbered, so the number of debit note will be written in column number 3. Then ledger folio, then details, then purchase return amount, then input CGST, input SGST, input IGST depending on the nature of transaction, whether it is intrastate or interstate supply, and at last column we will note down the total amount. Now let us understand purchase return book with the help of a practical question. Now I have taken illustration number 5. Now in this question they have said that enter the following transaction in the purchase return book of Govind Traders, New Delhi, assuming CGST at 6% and SGST at 6%. Now the business for which we are going to prepare purchase return book is situated in New Delhi. So for checking whether the transaction is interstate or intrastate, this information will be needed. Now let us see, on June 15, 2017, return goods to Radhika Krishan and Sons, New Delhi for rupees 20,000, means the goods that we return, it's worth rupees 20,000, and in that there was trade discount of 10% and the number of debit note is 140. Now let us see the solution. First we will prepare the format of purchase return book. Now in date we will write June 15. Then in particular, first we will write down the name of the party or name of our supplier with address. Then debit note is 140 given in the question. Then the question mentioned that the goods that we returned was worth of rupees 20,000. Then again they said that there was a trade discount of 10%. Remember, while doing journal transaction we used to provide this trade discount while returning goods as well. So in this case also we will deduct trade discount at 10%. 10% of 20,000 is 2,000. So after deducting we got 18,000. Now since the question mentioned that CGST at 6% and SGST at 6%, since this is a intra-state transaction, so we will charge 6% of CGST and SGST each. 6% of 18,000 is 1,080, so for both SGST and CGST we will charge 1,080, 1,080. So after adding we got total amount of 20,160. In purchase return we will write down the amount after deducting trade discount, then input CGST, input SGST, and at last the total amount will be noted down in the last column. Now let us see next transaction. On June 20, return goods to Gopal Sons. It is also situated in New Delhi for goods for worth rupees 50,000 as the goods were not according to sample, and the debit note is 141. So we will note it down, Gopal Sons, New Delhi, debit note number 141. Then since they haven't mentioned trade discount of any, since you can see there is nothing mentioned about trade discount, so instead of we will not deduct trade discount, directly we will go to the next step, that is adding CGST and SGST at 6%. So 6% of 50,000 is 3,000 each. So after adding we got 56,000 of total amount. In purchase return column we will write 50,000, CGST 3,000, input SGST 3,000, and at last total amount we have 56,000. Now let us see next transaction. Allowance claimed from Raghubir Prasad, New Delhi on account of mistake in the invoice. Now see, for the previous two transactions we returned goods, but in the third case we are asking for allowance, we are asking for some money because there was some mistake in the invoice worth rupees 10,000. So for that we issued a debit note, and that debit note is number 145. So we will write Raghubir Prasad, New Delhi. Since there is no trade discount or nothing, see, we are just asking or claiming our allowance, so there will be no trade discount. So directly we will add up CGST and SGST at 6%. 6% of 10,000 is 600 each. So in purchase return we will write 10,000, then CGST 600, SGST 600, and all together in total amount we have 11,200. Now this is how you prepare purchase return book. Now I hope you have understood this one. Now let us move to the next topic, that is how to prepare sales return book, or you can say sales return journal. Now this book is used to record the return of such goods as were sold to the customers on credit basis. Now when we sell goods on credit to our customer, and if that customer returns some of the goods, then at that time we will record it in our sales return book or sales return journal. Now this is also known as return inwards book. When the goods are received back, a credit note is prepared in duplicate and the original copy of the same is sent to the party from whom goods were received. Now these are just for your knowledge, because they might ask you in objective type question or small answer type question. Now when you receive goods back, that time what you do is that you prepare a credit note in duplicate. That duplicate part will be with you as a source document, and the original will be given to the party from whom you have received the goods. A credit note contains details relating to the name of the customer, details of the goods received, and the amount of return. Each credit note is serially numbered and dated. This note is called a credit note because the party's account from whom the goods are received back is credited. Means since we are going to credit the account of our customer, that is why the note that we issue to them is known as credit note. The same note is called a debit note by the party who is returning the goods, because that party will use this note for debiting the account of the party to whom it has returned. Now in our previous topic, when we discussed that when we issue a debit note to our supplier, at the same time our supplier will also prepare a note, and that note will be known as credit note. In the similar manner, when we receive debit note from our customer, that time we will prepare a note and we will send it to them, and that will be known as credit note. A duplicate copy of the credit note sent to the party becomes a source document on the basis of which the entries are recorded in the sales return book. A credit note is also sent when a sales invoice is overcharged, or if there is any mistake in the invoice. At that time also we used to issue credit note. Now let us see the format of sales return book. First column there will be date, then second particulars. First we will write the name of the customer from whom we have received goods or whose accounts we are going to credit. Then at the third column we will note down the credit note number, then ledger folio, then details, sales returns, then output CGST, output SGST, output IGST, and in the last column we will note down the total amount. Now let us see one practical question of sales return book. In illustration number 6, prepare sales return book in the books of Ramlal and Company, Hisar, Haryana, from the following transactions, assuming CGST at 6% and SGST as 6%. Now the company or the business for whom we are going to prepare sales return book is situated in Haryana. Now let us see the first transaction. On April 6th, goods returned by Ganga Prasad and Company, Karnal, Haryana. One table fan at Rs 6,000. And there is trade discount of 15%. Now this is the format of sales return book. So first we will write down the name and address of the customer, Ganga Prasad and Company, Karnal, Haryana. Then since in the question they haven't mentioned the number of credit note, so we will not write down, and the information or the goods that they have returned is table fan at Rs 6,000 each, so we can directly write 6,000 in here. Then they have mentioned that there is a trade discount of 15%, so 15% of 6,000 is 900, so after deducting we got 5,100. And since the supplier and our business the customer and our business is in the same state, that is Haryana, it is an intrastate supply, so we will charge CGST and SGST at 6% each, so we got 306 for each GST, and altogether we got 5,712. So accordingly we will write individual amount in the column. Then next transaction, on April 12th, Shyam Oil Mills, Yamunanagar, Haryana, they return defective goods valued Rs 40,000. So since there is no trade discount, we will just write the amount 40,000. Then CGST and SGST at 6% each, and altogether we got 44,800, and we will note down the amounts on individual column. Then next transaction, Allowance allowed to Sanjay and Company, Faridabad, Haryana on account of mistake in the invoice 2500. There was a mistake in the invoice and we have claimed allowance from them of rupees 2500. So we will write the name of the company or the business, that is Sanjay and Company, Faridabad, Haryana, of rupees 2500. Then we will add SGST and CGST at 6%, so 150 each, and altogether we got 2500 in sales return account, 150 column, 150 in output CGST, 150 in output SGST, sorry, and altogether 2800 in the total amount column. Now this is how you prepare sales return book or returns in word book or sales return journal. Now since there is only one more topic left to cover in this particular chapter, that is journal proper, in our next session we will cover that, and we will try to wind up this chapter with that session. So I hope you understood these two topics that we have discussed today, and if not, then you can contact me. And for this session we will wind up here. Thank you.